Hey YouTube, I'm Jimmy. So, in my last video, I walked through my analysis of AT&T's stock. And in doing my research, I took a look at AT&T's debt, and although it's a lot of debt, I didn't see too much of a problem with it. And much to my surprise, I got quite a few comments in that video saying that I should have talked more about AT&T's debt. So, that's what I'm going to do in this video. If you're curious about the other video, there's a link in the description below. Now, when I first looked at AT&T's debt, sure, I thought that they had a lot of it, but I didn't see it as much of a problem. But after the comments, I began to wonder, perhaps I had overlooked something. Perhaps there was something bigger there that maybe I missed. So, after a much closer look, here's what I came up with. First off, let's start with this table. This is the bond ratings for the three major rating agencies. The top half is investment grade, and the bottom half is non-investment grade. This is where AT&T's debt stands with each of these companies. And as we can see, they're highest according to Fitch, and then both Moody's and S&P has them rated at the BBB level. Now, these ratings also come with an outlook. Now, usually what they'll have is they'll have a positive, negative, or stable outlook. And with all three of the rating agencies, AT&T currently stands at a stable outlook, meaning that these ratings are unlikely to change anytime soon. Now, these ratings are important. So right now, the average yield for AAA corporate bonds of, let's say, 20-year bonds is about 3.8%. Now, the average yield for bonds with an A rating, well, they're yielding about 4.9%. Drop down to the BBB level, and you're getting about 5.5%. And obviously, the more the rating falls, well, the more expensive debt becomes for that company. Now, let's take a closer look at AT&T's debt. So as of the end of the third quarter in 2018, which is the last quarter that AT&T reported, well, AT&T had long-term borrowings of about $169 billion and another $15 billion that was due in the next 12 months. Now, technically, that amount due in the next 12 months is short-term debt, but for our purposes, we're just going to group it all together, and we're just going to call it debt. So if we round that, we're going to say it's about $185 billion in debt. Now, I'm ignoring other forms of debt like their pensions or deferred taxes or short-term debt like accounts payable. Now, AT&T actually does a great job of mapping out their debt for us on their website. They even have a spreadsheet with all the individual bonds listed on it. And if this type of thing gets you excited, well, the 10K and the 10Q, their footnotes go further in detail about these bonds. So there's tons of information out there for anybody who's interested. Now, just so we can see how much debt AT&T really has, here's their market cap, AT&T's market cap. And when we add debt, well, we can see that debt is almost as big as their market cap. Now, to put this scale in perspective, these green bars, these are Coca-Cola's market cap relative to their debt. And if we were to swap that out with a competitor like Verizon, we can see that Verizon has more debt than Coca-Cola, but still, AT&T has relatively much more debt compared to those companies. So how bad is this debt, and does it threaten their dividend? So the short answer is, of course, a company having a lot of debt is a bad thing relative to a company that has no debt. So why didn't I think that AT&T's debt was a threat to their impressive dividend? Well, here are a few stats that I thought was interesting. First, the average interest rate, weighted average interest rate for the debt outstanding is about 4.5%, with an average maturity of about 12 years. Now, I think that this is important because as we all know, interest rates have been rising. So the question is that rise in interest rates going to eventually hurt AT&T's dividend or their ability to pay that dividend? Now, personally, I don't think that their debt is a threat to the dividend right now. And here's why. This is a chart of AT&T's debt by maturity. And as we can see, they have a decent amount of debt that's coming due in the next few years. But broadly speaking, a lot of their debt is fairly well spread out amongst the whole chart. This chart goes all the way to 2049. But AT&T has debt going all the way out to 2096. So that final bar is what expires in 2049, and all the debt after that, it's all combined into one bar. So now let's look at the impact of rising interest rates on their debt. Now, we know that the weighted average time until the bonds must be repaid is about 12 years, which means that if they were to issue a bond today and it were to be at their average, well, 12 years from now, they would have to repay the original principal. So the question is not, are bond rates rising? The question is, how different will the cost of debt be with the change of interest rates for AT&T? So this chart here, this comes for the Federal Reserve, and it shows the average yield of high quality corporate bond rates going back to 1984. And as we can see, yes, rates have been rising recently. Now, these are 10-year bonds that this rate is looking at. So if this was an AT&T bond that was being replaced now, well, that bond would be based on that point in time. Now, I know this is a very crude way of demonstrating it, and obviously it doesn't always work out like this because we're just using an average, but I wanted to show this because I feel that this chart illustrates how relatively small of an increase the rise in interest rates has been compared to its own historical averages. Now, rates may continue to rise for the next few years, albeit probably at a slower pace, but either way, I'm not sure that this is going to become too much for AT&T to deal with as far as the interest rate payments go. And I'm not sure that the way that rates are rising right now that AT&T's dividend is going to be threatened anytime soon. To examine, let's look a bit closer. Jumping back to the maturity date chart, well, when we look a bit closer at, let's say, 2021, just because they're the largest amount due in any single year, well, the weighted average rate of that debt was a bit over 4%. Now, if that debt was all renewed at, let's say, today's rate, which is likely to be close to 5%, which is about 1% higher than the current rate, well, it's important that we consider that that 1% increase is only on about 7% of all their debt. So when it comes to AT&T's ability to continue to pay their interest expense, well, they're going to have a very minimal impact by if they had to renew all of that debt at that point. So now when we look at AT&T's earnings before interest and taxes and compare that to their interest expenses, well, we can see that right now, AT&T has more than 3 times operating profits compared to their interest expense, which tells me that they have enough money to, or at least enough operating profits to continue to cover their interest expenses. And as we said in the previous video, we know that they have enough coverage to handle their dividend payments, which is after their interest expenses and taxes are paid. Now, in reviewing the last earnings report, specifically their earnings call that they had, well, they made a few points. First, 90% of their debt is at a fixed rate. And this is important because that means that they're not going to get a sudden jump in interest expenses thanks to the resetting of debt. Plus, AT&T's management has stated their desire to have debt levels relative to income at historic lows by 2022. And they claim that they will be able to fund that mostly by free cash flow and maybe sell off a few of their non-core assets or businesses. Either way, because AT&T's debt is so spread out, their credit rating remains stable, at least for now. It seems that their dividend payments and their interest payments are manageable relative to their profits. I personally feel fairly confident in my analysis of AT&T's stock and AT&T's debt. But do you agree? I do recognize that every investor is different and every investor needs to do their own research and will have their own perspective. For many, this amount of debt is simply going to be too much to let them feel comfortable, and I completely understand that. Let me know if you think AT&T has too much debt in the comments below. If you haven't done so already, hit the subscribe button, and thanks so much for sticking with me all the way to the end of the video, and I'll see you in the next video. Thanks.